This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past several months, inflation in the United States has been moving through a gradual cooling phase after the sharp increases seen in earlier periods. While price growth slowed compared to peak levels, many households continued to feel the impact of higher costs across essentials like food, housing, and transportation. In the weeks leading up to now, inflation trends had been mixed. Goods prices showed signs of stabilizing, while services, especially housing and insurance, continued to rise more steadily. This uneven pattern made it difficult to determine whether inflation was fully under control or simply transitioning into a slower phase. This week, new economic signals reinforced that mixed picture. Several price indicators showed modest increases in certain categories, particularly in services and seasonal items, while other areas such as consumer goods remained relatively stable. Energy prices also played a role, with some regions experiencing slight fluctuations that contributed to overall price movement. These changes suggest that while inflation is no longer accelerating sharply, it has not fully settled into a stable low-growth pattern either. Looking at the broader trend, the signal right now can best be described as gradual stabilization with pockets of persistence. Inflation pressures are easing overall, but not disappearing entirely. Instead, they are shifting between categories, creating a more balanced but still elevated price environment. For households, this means that while extreme price spikes may be less common, everyday costs are still higher than many were used to in the past. Grocery bills, rent, and service-related expenses continue to influence monthly budgets. Some families are adjusting by focusing more on essential spending, comparing prices more carefully, and looking for ways to manage recurring costs. Periods like this often encourage more disciplined financial planning, especially when price stability is still uncertain. As a simple cultural reference, even large public events and entertainment experiences, often associated with high-profile figures, have reflected these broader cost trends, where ticket prices, travel, and services remain elevated compared to previous years. Looking ahead to next week, key indicators to watch include updates on consumer spending, energy markets, and additional inflation-related reports. These signals will help determine whether the current stabilization trend continues or if new price pressures begin to build again. For now, inflation appears to be moving in the right direction, but the path toward fully stable prices remains gradual. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed, and protect your wallet.